Hello traders, welcome to the video. In this video I'll be showing you a very quick step index strategy that you can use to trade the step index. I have come with a new one, the one that I use for my step index trading. So I trade volatility, boom and crash, step index. The reason why I drop most of my videos to be indicators and strategies for the boom and crash is because the boom and crash market is a very easy market, and it's the one that you can easily make cool money on without stress. That's why I love boom and crash. So the spikes makes the profits nice. But the step index, as we all know, there is nothing like spikes over here, so everything works like the volatility, but it's just a little bit different from volatility. And the stop loss displacement is smaller than the volatility. So let's head straight to the video without wasting much of our time. So in this video, as you all see, I have the polygon band and I have a moving average. If I zoom in, you can see I have two moving averages. I have this black, which is the 12 moving average, and I have this yellow, which is the 5 moving average. So how do you use these 3 indicators for this strategy? So like I first said, this Bollinger bands help us know when the market is overbought or oversold and when the market is likely to drop some. But here we are using it for different purpose. So here we are using the Bollinger Band to know when the market is on a downtrend or when it is an uptrend, and when it will continue on a downtrend and when it will continue on an uptrend. So what is our main focus? Let me give a small illustration of how this thing works. So if this is uptrend and this is the Bollinger Band, and we have the moving average in between the market. So what we are waiting for is we want this moving average to cross like this and to cross again below the Bollinger Band. So once it crosses, then you see market following the same direction, and when it crosses again, it's indicating that the market is also changing trend. Hope you understand my illustration. If you don't understand, no problem, I will use the charts to explain now. So like this market, the one we have over here, we have the Bollinger Band to be below the market, which is indicating that the market is in an uptrend. And like this one over here, in which we have the Bollinger Band at the top of the candles, is indicating that the market is in a downtrend. So as we all know that it is going down, and this place is going up. This is a perfect example of what I am about to show you today. This strategy applies to only uptrend and downtrend, but you should know that you can use it for the reversal of a trend. That means if the market is coming down like this and then you change direction, you can look for your setup around this area, or you can use this for your continuation. The market has been trending, the Bollinger Band here, you can see the setup here, and it continues trending. So this is a very perfect example of the one that is trending, because our setup is around this area. So what we are looking for is, if you look carefully, you see that the 2 moving averages, which is the yellow and the black, crosses around this point, but it is below the Bollinger Band, which is indicating that the market is still going on an uptrend. Then once you see the first cross, you relax your mind and then you wait still you see the second cross. But one thing you should know is that both crosses must be below the Bollinger Band. This is showing you that the market is still going in an uptrend. If you see the one cross here and another cross at this point, you should not take the risk. You should not enter the trade, because the market can consolidate it or reverse. So here we are not risking our money on what we don't know. We want to risk our money on what we are sure of. So if you look it over here, it crosses. You don't just jump enter, you relax your mind, because you know it is likely to give you your setup, it is likely not to give you your setup. Nobody knows what will happen next. We are just using each of our different confluences to get trade from the market. So you relax your mind. Once you see the first cross, then you wait for the second cross over here, all like I said below the Bollinger Band. That is very important. Then immediately you see that, then you enter a buy. So you enter a buy and you hold. Still you see another cross of the moving average. So this is the cross that we entered on. This is another cross. So we're able to hold our trade from this point to this point. That is a very big pips, guys. So, and then another setup is cooking, because we have seen a cross. We relax our mind, because we know that if the market crosses again under the Bollinger Band, we are entering another trade to buy. So we see the first cross, then we wait for the second cross. So immediately we get the second cross, we enter a buy again and hold our trade. Still we see the next cross. So as we all see, from this point to this point, that is not a lot of pips, but we are able to cash trends in the market. We are able to make some money out of the market. So immediately we see this cross, we are still calm. We know that another opportunity. If you look carefully over here, you will see that another cross happens. Then we enter a buy again, we wait, still we see another cross, another one occurs. Immediately after the cross, we enter a buy again, we wait, still we see another one. Then the market does not give a clear cross around this area. The Bollinger Band is declining. If you enter at this point and you see that the market is entering this area, then you quickly close your trade. So that is why you don't trade with insane sizes. You don't trade with insane sizes. But if you also look over here, immediately the market crosses, we see a cross all at the top of the Bollinger Band. You can see it as the market is reversing, and you can see it as the market is also trending. So I supposed to enter this market that you see over here, but I just woke up. So immediately I woke up, then the market has already passed my entry, and I don't like chasing the market. I don't chase, I trade, I don't gamble. So crosses over here, then immediately it crosses again at the top of the Bollinger Band. We all know that the market is now going on a downtrend. Then we sell the market, we sell to the downside. Here if we see something like this, we are not trading, because we know that market is likely to go up, like you see over here, then come down. So here we are not trading because it is too ranging. If I zoom in, you see it crosses, it crosses, it crosses. So 3 crosses. So we enter here, we come out here, that is a very small pip, so we are not trading that. We are waiting for when the market is trending. So if you look over here, the market breaks out of this consolidation phase here. So immediately it breaks out. Once you see that break over here, then you wait. You see the first cross, you see the second cross. Bollinger Band is below market. So immediately we see that we enter a buy at this point. So we did not see any cross until it reaches this point. From this point to this point, that is a lot of pips in just few minutes. So immediately we see that we see a cross, we see another cross, we enter a buy again. Our stop loss can be below the Bollinger Band. We see a little drawdown over here and the market shoots out, going up to this point before we see another cross. So you guys can see that is a very large amount of pips also. Imagine you are risking like, maybe let me say like $200 on this. This is like 3 RR. That is times 3 of your money. $200 times 3, that is like $600 on this small move within few hours. This is for a downtrend. The market has been coming on an uptrend, lower high, lower low, lower high, lower low. It breaks down to change character, to start trade SMC. Everything all works together, everything confluence together. So lower high, break character. Then you are looking for market to go back to that between 50% of the previous zone, tapping another block at this point. Those that trade SMC understand what I'm saying. So we are not entering because it taps other block, although we know that it will tap other block over here, but we are not entering because it taps other block. But we are entering because one, it taps other block, market have changed character, that is two confluence. The Bollinger Band have crossed to the other side of the market, that is the third confluence. Then 3, the moving average crosses the first time, crosses the second time under the Bollinger Band, that is the fourth confluence. So immediately we have that when we enter a short. So once we see the first cross, we exit the market. We wait for another cross that is below the Bollinger Band. We all know that when market moves up, it comes down to move up again. So when market comes down, it goes up to move up again. So the market goes up to tap into, if you look carefully, this is a FVG. If you ever look up over here, retraces, showing a candlestick type for reversal. Then immediately we see another cross, we enter a sell. Then we catch, still see another cross, we enter a sell, see another cross. Then it keeps ranging a long time before you see the setup of a breakout over here. So I want you guys to note that I am using the first step index for explaining this strategy, and I am on the 5 minutes time frame. And you guys know that if the step index 100 did not give you setup, go to step index 200 or 500. At least in a week you will see a lot of setups in each day. Here we are not waiting for a long time before we trade. We see our setup, we take it because we trust it, we know it is high probability. Let me show you settings to the indicator I use for this strategy. So the first thing is you click on this indicator icon over here. So if you click on that, as you can see over here, I have 3 indicators. I have the Bollinger Bands, I have moving average and another moving average. So to select the Bollinger Bands, you click on this first F icon of the main chart. So if you click on that, this is Bollinger Bands and this is moving average. So first click on the Bollinger Band. You make your period to be 35, you make your deviation to be 0.100, you make your shift to be 0, apply to close, style to be 4 pixels, select color of your choice and click on save. To select this second and third moving average, you go to your F icon on the main chart again, then you click on this moving average. You make your period to be 12, shift to be 0, method to be simple, apply to close, style to be 3 pixel, make your color to be color of your choice. You can make it black. If your chart background is black, you can make your color to be another color. Click on save. To select the third moving average, click on this F icon again, make your period to be 7, shift to be 0, method to be simple, apply to close, style to be 3 pixels, make select color of your choice and click on save. So if you follow my settings correctly and you don't make mistake in setting up your chart should look exactly as what you see over here. So that is it, guys. I want you to go back on your chart, backtest this strategy. try and trade it with your demo account. You need to trust your strategy for you to trade. So, and the more you do it, the more you develop confidence for the strategy. If you love this video, don't forget to click the subscribe button, like this video, turn on the notification bell so that you will get notified anytime I release new video. I release new video every Friday and Monday of the week. Thanks for watching.